Now let's go to the CME. Frank Lesh is standing by there in Chicago, FuturePath trading. And Frank, let me ask you about the sort of late day rally that we saw. We were talking with this earlier about Dom and the Fed thinking about it will stop paying interest rates to hold these reserves. I mean, is this seen overall as good news by the market?
Yeah, no doubt about it. Any news out of the Fed that's supportive for the market certainly helps us, and an impressive turnaround we've had. Goldman Sachs turned around, but I think, we've got some bargain hunters down here. Valuations were right, and possibly the bad news is out on Goldman Sachs. They took their, medicine from the SEC, they had to write off. So going forward, they're not shackled by any of those problems at this point. And again, bargain hunters abound in here. Whether the rally continues or not, we'll have to see. We're probably in for several weeks of chopping around during this earnings season. So we could easily give this back tomorrow on the right news or the wrong news, if that is.
Frank, I've been hammering this about the volume story here. All right, it's an up day, but it is again on light volume. To me, does it make it not such a significant move?
Well, the move is the move. We're all paid in the dollars that we experience here. But really, yeah, that is certainly one of the problems. The up days don't have the volume that we'd like to see. And certainly we need to turn that around. If these rallies are going to last, if things are really turning around, then we should start to see that volume come in. As of yet, that is certainly not the case. So I think there's going to be a lot of index traders waiting to sell into this rally. Of course, today we were all short, on the bad news, and we really didn't have much downside. So a good part of this is short covering.
Hey, I want to talk a little bit about valuation, guys. And earlier we had Professor Jeremy Siegel on our air, a professor of finance over at the Wharton School of Business. And here's what he had to say about the market. He's a bull.
From a valuation standpoint, I find this one of the most persuasive markets in many decades, actually, facing investors.
All right, Michael Mullaney, I want to bring you into this. You're portfolio manager at Fiduciary Trust. You oversee about $9 billion in assets. You've been cutting back on stocks since early this year. Professor Siegel says this is a good time to buy. Why do you think he's wrong?
I don't necessarily think he's wrong, but I think he's probably a little bit too aggressive on a statement. We like the market a lot better back in March of 2009 when we were basically at 8 or 9 times forecasted forward earnings. We're about 14 to 15 times right now, which is about median valuation from our standpoint.
What do you think about, you say that since we've seen people coming down in their estimates, you're going to continue to see beats, and we have seen mostly beats as far as earnings season is concerned. But is that as important as what we're seeing in the economic data points? Does one outweigh the other right now?
Well, it's a great tug of war that's going on right now. The macroeconomic data definitely has been disappointing. If you look at what we follow, the economic surprise index, which is of the statistics being reported, how many are beating and how many are missing expectations, most are missing expectations right now. So we've definitely got some macroeconomic headwinds right now. On the other side of the equation, though, out of the 68 companies through yesterday that reported for the S&P 500, 55 had positive surprises, or 81%, which is well above what the average is.
Let's bring in our guests, Michael Mullaney and Frank Lesh. Michael, we have gotten a lot of earnings, some better than expected, some disappointments. How's the earnings season so far playing out in your view? And I should point out, we're pretty early in the earnings season.
Sure. Like I mentioned, so far about 81% of the companies have had positive surprises. We think that's probably going to continue. Maybe not as robust as an 81% number, probably something in the low 70s, but that will still be better than expectations. We do feel that, coupled with some really lousy sentiment right now, probably will give the market a fairly good bid for at least a couple of 3 weeks as we go through this earnings season.
It's interesting that you see Yahoo coming out and actually it looks like beating on the top line, so better revenue than expected, but missing on the bottom line. We see kind of the reverse of that, Michael, and a lot of the other releases that we've seen so far. So while they are beating on what you point out are sort of analysts beaten down estimates here, they're still missing on the revenue side. Is that a big concern for you?
Yes, it is. Matt, it's a great point, because if you look at the revenue growth on average right now, it's about 6% revenue growth, yet we're getting mid-20s earnings growth out of that. That's the leverage built into a lot of these business models, but it can't continue. One of the reasons is that sales growth is very closely tied to nominal GDP as compared to real GDP, and nominal GDP has been very sluggish in this recovery.
Frank, let me ask you what you think about the prospects for this economy. If we're missing on the sales side and we still have, obviously, the problems in the housing market, they feed through to problems in the labor market. I mean, are people on the floor there pessimistic? Are you pessimistic going forward?
Well, you know, at the moment, earnings are expected to be a positive in here. So we expect the market to do well for the next several weeks. The real question is about this tug of war that we have going on.
Frank, even if it shows that that's just cost cutting and we continue to miss on the revenue side?
Well, in general, we're supposed to be positive on earnings, and that is giving a boost to the markets. You know, we dissect that. Again, the real question here is what happens after the positive influence of all the earnings happen, and we take a look at what's going on with the economy in the next several weeks. And the real question is when does some of this data help turn around, stabilize, and turn back up? And that does not bode well for the market going forward.
All right, guys, we do have to leave it there. Frank Lesh of FuturePath Trading and Michael Mullaney over at Fiduciary Trust. Guys, thank you so much for walking us through the close on this Tuesday. We appreciate it.